In the past 2 years, Islamic capital markets have grown significantly. We've seen some exponential growth with sovereigns tapping the Islamic market space in the form of raising debt through sukuks. We've seen some new names in the form of United Kingdom, Luxembourg, South Africa, Hong Kong, to name a few. Not just these new countries coming to tap the international markets with sukuks, even the form of what sukuk was raised for has changed. Early on, corporates and sovereigns used to raise sukuk in order to raise some debt, but now the structure has changed and we've seen even sukuk being tapped for raising equity. Not just that, we've seen some new regions as well come into the Islamic finance space. Africa is a continent that has become far more important in the last 3 years, with West Africa, East Africa and North Africa making giant strides in the field of Islamic finance. In the last few years, we've seen new asset class emerge. Islamic sukuks have become predominantly the asset class that have been tapped over and over again. 41% of the international sukuks that have been tapped within 2015 are all coming from sovereigns. If you look at who these sovereigns are and where they come from, not just the new names, but the more established ones have been tapping the capital markets in the form of sukuks. Sukuk has become more relevant than bonds. Bonds would be used by conventional players, but the more investor base friendly sukuk has been used in the recent past, and we've seen that 75% of the sukuks within 2015 have come from the more established regions in the form of Malaysia, UAE and Indonesia. Having spoken about capital markets in depth, another form of asset class that has been emerging within the Islamic finance space is the Islamic wealth management. Still nascent industry at $60 billion. We expect this to grow further to around $77 billion, making giant strides within years to come. Well, oil is a much talked about topic these days. Volatility in oil prices started within the second half of 2014. Although that happened, we had a remarkable 2014 in terms of corporate earnings across the banking sector, not just Islamic banks. In 2015, with the first half of 2015 behind us, we've seen the significant of oil on the profitability of banks has not been as much. Having said that, if oil price continue to be sustained at low levels, we would definitely see an impact on liquidity, and that would also mean that lower sukuk issuances by corporates and sovereigns alike. When you compare the first half of 2015 with the first half of 2014, you will see that there have been lesser number of sukuk issuances in 2015 than they were in 2014. So yes, oil would have an indirect impact on the profitability of the bank, emulating and emanating from liquidity, but we've not seen that so far, and hopefully I think oil would the prices, falling oil prices would be arrested, and we would again see oil prices rising in the years and months to come. While we anticipate oil prices to start rising in months to come, one must not forget how Dubai specifically has managed the volatility in oil prices. If you look at the economy of Dubai, there is diversification across its economy in the form of various non-hydrocarbon sectors, and these have contributed well. If you look at trade, travel, tourism, hospitality, healthcare, education, these are sectors that have continued to do well even when oil volatility was at its peak. So I think it's a matter of time. While oil has been talked about for months, I think the economy has done well, and the staying power of some of these OPEC countries is far significant than oil volatility. The strategy is very simple: new segments, newer geographies. Gone are those days where Islamic banking was for Muslims alone. If you want to sustain competition with conventional banks, you've got to make sure that the products and the services that you offer are unique in nature, not just competitive in price. In addition to products and structures, convenience, accessibility are the unique USPs that Islamic banks account for. Customer service and service excellence is of far more importance than in the years gone by. Newer geographies are equally important, because if you want to tap into a larger customer base, you've got to go into geographies that you have never been before. Africa, Far East Asia, GCC and the Middle East continue to be on the agenda of many banks, and if these banks want to look at expanding away from home, these are geographies that they'll have to focus on. Till date, Islamic banking and finance has been a major part of the Islamic economy. Having said that, the lifestyle sectors such as travel, tourism, fashion are sectors that need to be developed. What is required is for Islamic finance to play the catalyst role in making sure that these sectors start to grow. So it's just not the need for financing, but also research would play a very important part in making sure that the other sectors of the Islamic economy would start to grow. So while Islamic finance has made great strides in developing the Islamic economy where it is today, its role is still not over, because it stands in the center and the crux of the Islamic economy, and it will have to play a major part in making sure the other sectors of the Islamic economy would continue to grow.